Hello, can you guys hear me and see me? Welcome to another session with IronFX. My name is Annabelle. Okay. So welcome, Posthumous. Welcome, Dipesh. Hi, Juha. Hi. Welcome. Hello. Nice to see you guys. This is the first few session of the Forex army together with IronFX. This is my first few session. So nice to see you guys. Let me know where you guys are tuning in from in the comment section. So I have another page that is open and I will be answering any of your questions if you do have any. So feel free to just post any comments, any questions while I go through the webinar. So let's give the rest of the attendees a couple more minutes before I start. So today's session will be the third part of the Fibonacci series, which is the Fibonacci Expansion. Hi, Juhaya, you're from Finland. Okay. Peter, why have the markets been ranging? Which markets are you talking about? So maybe this couple of hours might be a bit sensitive because there's a big news coming on tonight, the CPI. All right, GU, maybe we can take a look at that later. So yeah, to answer, Juha, you're from Finland. I am tuning in from Singapore. Nice to see you guys. Oh, it sounds like it's raining right here. Okay, just a couple more minutes before we start. Maybe I should start with the risk warning. So our products are traded on margin and carrying a high level of risk, and it's possible to lose all your capital while trading. So FX may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer: the information in this webinar should not be construed as investment advice or an investment recommendation. So please practice your due diligence before you trade. And any material in this webinar is strictly personal opinion of us. The client's investment objective and risk tolerance have not been considered. So yes, please practice your own due diligence. Okay, we have a few more attendees. Hi, Mikhail. Okay, so let's start today's session on Fibonacci expansion. Okay, so the agenda, hang on, give me a sec. Okay, so for today's agenda, it's quite clear. I'll be touching on the third part of the Fibonacci retracement, which is the Fibonacci expansion. So this is quite an important tool because it's where we will catch the reversals, where you can fine-tune your entry or fine-tune your entry levels and probably your take profit or your stop loss. So let me know if you have ever used the Fibonacci expansion. Yep, the agenda today will be, I will cover some parts on the ideal market structure. So it's kind of like a recap on the Fibonacci as a whole, in case some of you guys have never seen it or you have missed the past sessions. Following the trend line, the different retracement levels, Fibonacci, this should be expansion, sorry, and then Fibonacci levels below and above 100%, the live practice. Okay, so this is me, Annabelle. I'm from the Forex Army. As you can see, we are the finalists for Best FX Research 2019, 2020, 2021, as well as finalists for Best Equity Research 2020, 2021. Okay, let's start with the recap. So what is the ideal market structure? So what I mean by ideal market structure is that you need to make sure that there is a trend going on. So let me just draw. Okay, as you can see here, this is an ideal market structure. It's a very nice bullish momentum right here. So you do not want to go to the 15-minute time frame to catch all the small waves because it will be inaccurate. So in any case, if you are using a Fibonacci retracement tool, we would highly recommend to use the 4-hour or the 1-hour chart because it's cleaner in this manner. Yeah. Okay. Okay, so for Fibonacci, to draw an accurate Fibonacci, we try to catch significant, maybe I go to the next slide first. We try to catch significant swings like this, big movements. Okay, because this will make your levels more accurate. We are looking for swing highs and swing lows. So usually these are captured in the higher time frame, meaning the 1 hour or the 4 hours. So what I mean by insignificant swings means probably if you are scalping your trades, you will be looking at 5 minutes, 15 minutes, or half an hour. So these swings are very insignificant because they're very choppy. You do not know where to start your level, where to end, where to draw your levels accurately because there can be so many levels here. So these are small, choppy, insignificant waves that we do not want. Yeah, please take note. Okay, hi Mabilo, hi. Hi Peter. Hi, welcome to this session where we are talking about Fibonacci expansion. Do let me know if you guys have any questions at any point in time. I will just answer if I have the time. Okay, so following the market structure, okay, while drawing your Fibonacci, you do not want to cut across like this. You do not want to cut across the chart this way, where you have a lot of gaps in between and the price are not close to the trend line. Yeah. So an accurate, maybe let me just show you guys some examples, some live examples. Okay, so in order to draw your Fibonacci, what we do is we will draw, let me go to a higher time frame. You want your trend line, which is this blue line, to connect as close as possible to your price. It shouldn't deviate much. So this is a very clean line that we are looking at, a very clean Fibonacci trend line that we're looking at. Instead of maybe instead of this. Okay. This might not be as accurate because of this part, which is a bit messy. Okay, so you try to draw as close as possible to your price. See the levels. Let me adjust this here. Okay. Try to be as close as possible to the trend line that you're going to draw for a more accurate Fibonacci retracement tool. Okay, back to, okay, so this is wrong because you can see that the gap is very wide. So this might not be a good Fibonacci trend line that we are looking at. So there are two rules that I always follow. The trend line must follow the price structure clearly, and the trend line can deviate, but not by too much. Okay, so in this example here, this line that they draw is very clean, where the prices are following the trend line. So this is a nice Fibonacci retracement. Okay, so let me refresh your memory on the different Fib retracement levels. So we have previously already learned here. This is the Fibonacci retracement, which is between 0 to 100. Anything that is beyond the 100 will be your extension. So this one we are looking for, the Nike tick. This is covered during the previous session. Later, I will show you guys how you can find previous session on IronFX website, because these are all recorded. And today we are learning Fibonacci expansion, where it goes below the 0, meaning the negative zone. So these are called expansion. Just to give you some advice and tips, these are called, the whole series are called Fibonacci retracement. It's just that they are named differently, but these tools are used to find reversal points. So it can help you better fine-tune your entry level or your take profit stop loss levels. Okay, so let's take a look at this chart. Okay, like I've mentioned, okay, the 0 to 100%, these are called retracement levels. Yeah. So if the price reaches here, this is still within the retracement zone. But if price comes here and goes down, this is called the expansion. Alternatively, price could also, let me get my pen, hang on. Okay, price could also come back down here and go all the way up to the 100%, breaks this level and go beyond the 100 to the 127.2 level. So these are called the extension levels. Okay, please take note of these important levels. These are all key levels. Okay, so Fibonacci levels below 100%, and how do we use and how do we spot the levels, and are they really useful? Let me know in the comment section how many of you guys have actually used the Fibonacci expansion. So in my opinion, actually Fibonacci expansion will not be as useful on its own. Mikhail, I've used the retracement. Okay, that's great. But have you guys used the expansion before? So in my opinion, I feel that expansions are not useful on its own. It's not very effective. It has to be used with all the other retracement tools like your extensions and retracements. So at the end of the four sessions, you guys should know how to use it all together, where we can use the confluence to fine tune all our entry levels or take profit. Okay. So some examples before I go to the live trading charts. So I have put in some effort to go back in time to find some of the good examples that can simplify what are Fibonacci expansions to help you better understand it. So for Fibonacci expansion, you can see here, I think this is, let me see. This is GU. Okay, so just now someone, Peter, you have mentioned GU. Okay, this one would be GU, but probably in July. So this example you can see here. Okay, for Fibonacci expansion, we are looking for a retracement of at least 50% and above. Yeah, 50% and above. So point number one, we will be looking for a retracement level of more than 50% before we consider that as a strong or effective expansion. So right here, you can see my Fibonacci retracement tool I have drawn from here to here, and then it has already corrected more than 50%. So it's that it has slightly broken my 78.6. So once it has broken or tested anything above 50%, you will look for a reversal. You wait for a reversal to come back. And at this point, then you will take note. So number one, it has to retrace more than 50% and then bounce back to test at your 0% before I will take note of this trade to call it an expansion. So essentially what you are looking for is a flash. Yeah. So for expansion, we are looking for a flash. It can be downward or it can be upward. So long as it expands, it retraces more than 50%. Okay. Retraces more than 50%. 50 to 100, not more than 100. Because if, for example, if it retraces, let me erase first. For example, if your price comes here, retrace more than beyond here, beyond your 100%, this is called an extension already. So your expansion will be invalid. Yeah. Okay. Mikhail, your question, expansion continues the original direction. Yes, it does, meaning to say, okay, so if it's a downward trend, right, it will look like this. It will retrace more than 50%, and then we are looking for it to go back down to the 0% level before it captures your attention to go to the negative 27 before it bounces up. So here is very clean. Later, I will show you guys some of the live examples. Okay, these are the ones that I screenshotted to make it easier and faster for you guys to grasp the basis of it. Yeah. So let me try on another. Okay. Okay, this is another example. So this is also GU. Like I've mentioned, okay, your Fibonacci retracement tool, you draw it. It has to retrace, number one, 50% or more. So in this instance, it has retraced already at the 50% mark. Okay, so we're looking for it to reverse. And in continuation with this trend, meaning I'm looking for this. So anyone can tell me what will happen next if this is Fibonacci expansion. What should we be expecting? Let me know in the comment section. So like I've said, We're looking for the flash. Okay, I have some comments. Yes, it will go in this direction. Let me show you guys. Okay, so just now it came back down to test here, right? And then it goes up to the 0% level, which we are looking for. So the two things we're looking for is for it to retrace more than 50%. And then second point would be that it touches the 0% level. So at this point in time, when it touches, you should get an alert, or you should take note that if it goes beyond here and touches the minus 27.2% level, it should bounce off. So usually, for my take, how I trade is, at this level, I will wait for it to come to this zone. I will wait for a confirmation that is going upward. Obviously, I will use other tools like my retracement or my extension, my projection, and maybe other key levels to make it a more accurate trade. But in general, once it breaks off here, it's time for you to take note. And if it comes to the negative 27.2 level, I will take a short. It can be long as well, depending on how you draw your flash. So it can be this, or it can be a long. So depending on which way you draw your flash. Okay, to answer Mikhail, why would it bounce off there? These are all, so like I've mentioned in the first part of the session, retracement tools are used for projecting forward and for you to note where the prices are going to reverse from. That's why it will bounce off here. So these are all the levels where we are looking at for prices to bounce off. That's why it's called a retracement tool. Okay, I hope I answered that. Okay. Let's try more examples. Okay, so if you guys have any requests, do send in the chat as well, because I have one screen that is catered to answer your requests or your questions. Okay, so this is USD Swiss franc. Let's take a look at this. Okay. So number one, when you are using an expansion tool, make sure you draw your Fibonacci trend line correctly. It can deviate, but not to a huge extent like maybe this. This is too much. Yeah. So we try to make it as clean as possible. This way. Okay. So point number one for an expansion, you need it to retrace at least 50% or more. So this has already reacted 61.8% here. Reacted off and it's coming back. So this should look like a flash like this. So what we are looking for, or what we are projecting forward, is for price to come down here. That's point number two. Point number one, retrace 50% or more. Point number two, test the 0% level. Okay. So once it has tested, you will wait for a confirmation that is still going downward. Okay, this has already broken the key level here. So there's a downward confirmation. You will wait, probably an entry here. Might take profit. You could actually short it, or you can wait for reversal as well. So depending on which one you're more comfortable. Usually, if we are trading, I will go along with the trend. So if it's going in a more bearish manner, I would take a short here and take profit at the minus 27.2 because most likely it will reverse from here. Okay, to answer Mikhail, no, it doesn't always bounce off the minus 27. It could also go to the negative 61.8. So these are the two key levels that we look at. But for purpose of this webinar, I have taken most 27.2%. Yeah, you're welcome. So it's depending on how you chart and how you analyze your charts, because you don't only use the expansion tool. We still need to use extension, projection, retracement. You can use other tools or other indicators like your Ichimoku, your RSI, or your stochastic. So it's not just based on one tool that we make this decision to sell or buy. But these are all examples to help you understand Fibonacci expansion more easily. Huh? Okay, I think this might be the last few examples I have before I go to the live trading view. So right here, can any one of you tell me what we are expecting? I have drawn my Fibonacci trend line here. Okay, it's a bit messy, sorry. Okay, I have drawn my, I use a highlighter. Okay, I have drawn my trend line here. This is a very nice and very clean retracement trend line. Okay, so number one, we are looking for prices to, yes, okay, it's not necessarily 50% only. So it's 50% or more. It could have came here and bounced off this level. It could have came here and bounced off this level. So anything above 50%, not just 50%, take note. So it could bounce off 61.8, or it can even bounce off 100%. So it's depending. So it could come all the way here and then just go up this way. Yeah. But please note that if prices touches the 100% and goes beyond the 100%, is expansion is invalid. Okay, it will become an extension. So anything beyond the 100% is an invalid expansion. Take note. Okay, so yes, to answer Mikhail, yes, we are waiting for it to bounce off the 50% here, or 61.8, or even 100. So it could be any levels, but yes, we are waiting for it to bounce off and goes in the direction of where your trend line was drawn. So you can see here, they bounce off, can bounce off here. Point number 2, must touch. Sorry, my apologies. It's very messy. So point number 2, it has to break this level and then show signal and signs of a bullish momentum upwards. Then you can either buy here or you can short, because technically retracement tools are meant for reversals. So what you can do is also to short here, take profit. Usually I would just do it here because you will never know what happens after. Moreover, it's a very bullish trend. Yeah. What if it bounces off 38 or 23? Is that still good? Okay. If it bounces off, okay, let me draw it for you. Okay, let's say if, good question. So the reason why I keep emphasizing on the fact that it has to reverse off 50% or more because if it just bounces off your 23.6% and goes this way, it will just look like it's in a bullish continuation. It's just making a higher low and in a continuation of this trend. For example, here. So come up, this is probably at 23%, and then it continues with a bullish momentum. So usually we don't treat it as an effective level at 23.6 and 38.2 because and also the fact that we have done quite a bit of testing. So it usually is most effective after 50%. Yeah. Okay, so let me go to the live charts to show you some examples. Okay. Let me find a good example for you guys. Okay, we can try this. Let's try maybe US. If there are any requests, please send in. I can do it. Oh shoot. Sorry, this one is slightly messy. Give me some time to load the charts. Okay, let's take a look at this. Okay. So let's try to use a Fibonacci expansion here. We'll try to spot some in the live trading view. So let's try. Okay, for expansion, remember you are always looking for a flash, meaning to say, okay, maybe I draw using a pen. So we are looking for a flash, okay, which is something like this. Okay. Let's see if there are any here. Okay, so this is quite a good example. Okay, just now, Mikael, you asked whether bouncing off the 28, the 23 or the 38 will be a good gauge. Here I'm telling you that it will not be quite a good gauge because usually it should react at the 50% or more. Yeah, so you can you guys see? Okay, this is a very good example that just happened a couple hours ago. Okay, price retraced 50%, and then it bounces off here. Tested my 0% here, breaks and come to the 27.2, negative 27.2. And then you see my take profit. So usually people will do it. They will take a trade here or slightly below. And then the take profit should be at this level. Stop loss can be slightly above. Okay, this is how we usually use retracement tool to place our entry level, our stop loss, our take profit. So it helps you to fine tune it together with other tools. Yeah. Okay, so aside this, maybe I try to use all the tools together to show you what a confluence is like. Okay. So I'll usually draw a retracement first. Okay, you can see that it's reacting off the 61.8. So I will just leave. Where's my tool? Okay, I will leave the 61 because it's kind of testing here and it's rejecting. Okay, no use. Okay. What I'm trying to do here is I'm trying to give you a good example of a confluence where we use the Fibonacci expansion extension to fine-tune where you should enter your positions. Okay, just give me a second while I find. Okay, so now price is right here at this 134.95 level. What I can do is, okay, it's kind of ranging, so it's very hard to predict what might happen, and especially if there is a big news coming tonight. So maybe this is not a very good example. We can do a back test. Okay. If you guys have any requests, please send in. I can see on my screen on the left. Okay. Okay, maybe we try USDJPY, then I will go to gold. Okay, no, this, okay, so maybe I'll give you an example of the extension. So you can see here, as you can see here, this is what we call an extension. So for example, if we do a, let's chop off. Yeah, so for example, if market is in this manner, yeah, I'm doing a back testing to show you some examples. Okay, so let's say if market is somewhere here now, what I would do is I would draw the retracement levels to see. Okay, so number 0.1, you want it to retrace more than 50% fulfilled because it has already broken the 78.6. I will wait for it to test here. Okay, so if it okay, as you can see here, it's already broken the 100%. So this is what we call the extension. So this tool will bounce off the 127.2 level because for Fibonacci retracement, they are reversal tools. So here, I would then try to see whether, okay, wait, number one is already broken, so you can't see whether there's a flash because once it's broken, the 100% is invalid already. So this is called an extension. But what you can do is, let's try doing this. So it retraces. If, see, so in this, okay, maybe I draw a cleaner line. So from here to here, we can see that it has sort of tested the 50% and rebound and bounce off this level. It doesn't have to always touch accurately. Sometimes if it's close enough, you can try to do the Fibonacci expansion. So what we are looking for here is this. And we have the also a bullish confirmation here this way. So I'm looking to see if there is a continuation. Okay, so my point number 2 would be once it's tested the 0% here, then I will keep a lookout for price to come here and reverse. It is not a 100% guarantee that it will always happen, but this is what the tool is for. So you will monitor. Okay, it looks like it didn't break this level, so this is not a valid expansion. Yeah. Okay. So what do you normally do? We have a question here. What do you normally do during the year, the end of the year when the markets are ranging? To answer that question, if markets are ranging, sometimes it also shows volatility, which is good for traders. But if you are not confident using the tools, or if you feel that it's too volatile, sitting out is an option as well, because being neutral is good instead of having to trade when you are uncertain. Yeah. Okay, when it breaks 100%, it's an extension or expansion. Okay, so when it breaks, let me clear this up. When it breaks a, let me see whether this is a good example. Okay, let me just refresh this. Let me find a better. Okay, here. I think this is quite a good example. Okay. Okay, never mind. I'll explain from here. Okay, when 0 to 100 is your normal retracement, where we look for prices. Yeah, let me just chop off. Okay, where we look for prices to bounce off these levels. So this is your typical normal retracement levels in between 0 to 100. Okay, so if price is already here, we are looking for a reversal here, the 38.2. If it doesn't, okay, maybe you can look at reversal at 23.6 or, so these are all reversal points for you to take note. Okay, so if price doesn't break any of these levels and it goes, okay, and it goes below 0, it becomes negative. This is your expansion. Do note that expansion and extension doesn't mean it's in a certain direction. It's depending on how you draw your Fibonacci retracement. Okay, so just take note of the numbers. If it's between 0 to 100 is your retracement. Anything below is called expansion in the negative zone. Anything that is beyond 100, which is above 100, is called extension. So take note that it has nothing to do with which direction it is at. For example, if it's negative, it doesn't mean it's here. If it's more than 100, it doesn't mean it's here. So it's depending on how you draw your Fibonacci trend line. Yeah. And to answer your question, which time frame is best for this? I would usually look at H4, H1, or even on a daily chart. So usually what I do is I will take a look at the daily chart to see where is the market sentiment going. So it's currently, I'll use a normal retracement tool to draw. Anyway, for expansion, you also use the normal retracement tool. All these are drawn by using the retracement tool. So it's just how you read the numbers. So I would use a day to see where the market is generally going. So it's still in a bullish manner for USD JPY. Then I will zoom in. So here I also can see that maybe there is a potential for a expansion, but technically it's not that great because it's 23.6%. But if you zoom in, maybe you could have drawn here to here. Okay, kind of tested the 50%, didn't break. Yeah. Let's see where it goes moving forward. See whether this works. Just be patient with me while we try this. Oops. Is it? Okay, anyway, I'll use another. I'll just do XAU gold USD. Before I run out of time, I'll do a quick one on this. Anyway, yes, to answer your question, 1 hour, 4 hour is the best for Fibonacci. Okay, so here. Okay, right away, I am looking at this is quite a nice move. This, okay, remember, it always have to be significant. So we are looking at significant movement here, this way, yeah. So my chart would be something like this. It has already tested the 78.6. I'm looking for it to maybe touch here, bounce off, and then wait for it to test. Okay, this is slightly far, but this is technically what an expansion does. So I'm looking for it to test this level. If it breaks, then I'm looking to short here because this is the Fibonacci extension. Okay, it's at the 127.2%. So I'm looking, if it breaks here, I'm looking for a short here to come off. If it doesn't, and it becomes to test here, I will look for it to break this level first before I go to my Fibonacci expansion here, touches here, short it. Okay, but if you want me to do, okay, I don't think I have the time, but in general, this is what we're looking for the expansion. Okay, maybe I do a simpler one. Give me a sec. Okay, I'm at the 1 hour time frame. Okay, so what we're looking at is, remember the flash, right? So this looks like a nice flash right here, significant movement. Okay, we can try to look up for the, yeah. So here you can see that price has reacted off more than 50%. That's what we look for. Price has reacted, come off here, reacted off, and go in the same direction as where you draw your level Fibonacci. So right here, I'm looking for this price to maybe touch the negative 27.2 before it comes down. Yeah. Okay. So let me just show you guys where you can find the past webinars and this session. So you can come to the IronFX platform, go to past webinars, and then it should be here, where you can find all the previous webinar and rewatch it if you miss any of the parts. And also, recently, IronFX and the Forex Army, we have a special exclusive VIP trading room where we show our clients market forecasts, and you guys can actually ask questions. On this platform. So it's a very exclusive and personal page where there's a one-to-one interaction. I can show you guys. Okay, so you just come here. This is an example of how the page will look like. I'll give it a second. Okay, so when you join us on this exclusive page, you can see all day. You'll be able to see all the relevant FX news. You can just click in and see. And then we have a interact section where you can come to the chart. You can use the tools, for example, USDJPY. Okay, so I actually use it here. See, I'm able to let my clients know what are my thoughts for USDJPY or any other majors. So I can highlight key levels, just as you guys can as well. If you have any questions, you can just type key levels and then you highlight it. You can just draw any line you want, and then it will link it. So when you hover over that point, I'm able to see which line you are exactly talking about, and then we can comment. So this is the interactive section where we will be able to answer you individually. So we have Jean, he's our professional prop trader in this industry for more than 10 years. Very experienced, as well as Desmond himself, our CEO. So join us. If you guys are interested, log on to IronFX. Let me just cut the link for you. Okay, go to IronFX. I'll cut the link for you for easy access. Okay, we have you here. So these are the levels. You have a bronze. Give me a sec. Okay. Cut and paste. So this is where you register. Okay, so for to access the premium service, we have bronze, silver, gold, platinum, and diamond, depending on how much you have in your account. So for diamond 30,000 and above, you can direct message any of the traders and ask questions directly. Priority support, weekly private 30-minute group call where we analyze and discuss charts. And you can also DM our chief trader. So it's depending on what needs or what you require, and then you can sign up accordingly. So we hope that you guys can join us. Please register. Okay, so I have come to the end of the session today. I hope you guys have learned as much as I do. I will see you guys in the next session. Thank you for tuning in. Thank you.